I mean, unfortunately, we're just not seeing the low here yet. We're students of the market. We respect what the market's telling us. As we've said many times, the best strategist in the world is the internals of the equity market. And it's been telling us for months that, growth is probably going to slow. With the defensive leadership has been almost historic. What I mean by that is things like, utilities and REITs and healthcare, et cetera, have done extremely well at the expense of other parts of the market. And that's a strong signal, even in the face of rising interest rates. So what we think is about to happen now, the equity market, S&P 500, has held up extraordinarily well under the face of what I would say the average stock has been in a bear market now for 6 months. And that's usually the way it works. And so last week's price action I thought was fairly ominous on Thursday and Friday, where we had the defensives actually going down, as well as the sort of deep cyclicals like energy and materials, which have been terrific places recently, also gave it up. And that tells me we're going into this final phase, which the good news, the silver lining, Becky, is that maybe we can finally complete this bear market over the next month or so at the index level when we get this thing down 20%. And then that'll kind of clear the decks for us, we think, looking into the second half.
When you say 20%, you're talking about the S&P 500 or you're talking about the Dow? Because the Dow's only down about 7% for the year.
That's right. I'm talking about the S&P from its high, right? So its high was, close to 4,800. So down 20 would be something like 38, 3,900, which isn't really that far at this point. So we're about halfway there, maybe a little bit more. That would make us feel more comfortable that the S&P now reflects what the average stock has been telling us for quite a while.
Part of this, and you've walked through some of it, but I think you make a very interesting point that you don't know where the next leadership is going to come from, and that's why you think we're setting up for this, because when you can't look to leadership anywhere, everybody kind of pukes at the same time.
Yeah, that's exactly right. I mean, the defensives have been the place for the last 4 or 5 months, but now they're really expensive. I mean, it's hard for me to sit here and get excited about buying defensive stocks when they're this expensive. It's the market's way of just sort of, hiding out, and eventually that will give way. Now, once again, we'll take our cues from the market as we have this. If we have this decline, we're not sure. We can never be certain of anything. But if we get a decline into, May, June, then what we'll do is we'll look for relative strength. What things are holding up the best for the next stage of leadership? My guess, though, Becky, is that in the next phase of the leadership, it's going to be a mixed bag. I don't think it's going to be one area or the other. A healthy bull market or, a new bull market will basically see breadth improve. So we could see small caps do better. We could see value and growth working better together. And that's what we're hoping for. But we're just not there yet, unfortunately. And we have to be transparent with what we're seeing.